So one of the things that comes up a lot is as you look at doing these conditional orders is how exactly do you place them as far as the limit is concerned and really just kind of the step-by-step execution of it. So as I look at Netflix right here, I'm going to remove all of my drawing tools so we can just focus on some of these moving averages, because if there is one thing that I felt like got beaten into me throughout the learning of my trading is that markets always revert to the mean, and then that is the area that you're generally wanting to focus on for your trend continuation entry. So this would be based off the idea that Netflix is trading below the 50, the 100, and the 200-day simple moving averages. So based off of that, we're determining that the trend is pretty much bearish. And then we come in and look at the 21 EMA that rests at 277.79. So, you can be as precise with this as you like. A few pennies one way or the other probably isn't going to make a huge difference. But what I will often do is pull up a notepad. You can do this on Mac or Windows. Basically the same thing, but I just like to make the note of this price. This is also helpful if you like the price is off the screen or whatever it may be. But I'll just write down that 277. Let's call it 75. This is where I'd like to buy a put in Netflix. So when you're thinking about which one you'd want to buy, usually I am thinking about buying the in-the-money put options. So something like the 290 or the 285 would be okay. So we'll come back over into our options chain. This is the Analyze tab. I want to go to my actual trade tab right here. And then what we're looking at is the idea of how far out do you want to go, which in this case, I think it's a fine line. If you buy them 23 days out and you nail the move, well then that'll work out okay for you, but it gets to be a fine line. A lot of times I think the gift of time cannot be understated. So let's go out into the Decembers, especially since it might take a few days to get filled on this idea. And let's look at doing something like buying the 285 puts. So this is based off the idea that Netflix rallies back up into the 21 EMA, and then we're still going to be buying an option, which at that point, it would still be in the money, just not quite as deep as it is now. So I'm going to click on the 285. I'm going to look at buying the single put option. And then this is where it gets kind of interesting. So you'll go over into this right-hand area, and you'll notice that this does not populate until you hover over it. You have to hover over this area, and then that little gear will show up. When you click on this is the context menu that is so magical. And, I guess you could work this from the top down, but the way that I've always felt that it made the most sense to me is to start with your condition, and this is going to be the area that's more in the middle of this context menu. What we're going to do is just click on the area below symbol. Notice how when I hover the mouse over it, it kind of turns gray, which lets you know that it becomes active. All I do is click once, and by clicking once, it's going to automatically populate with the symbol in question. Now you can make this as complicated as you want to, which is to say, like I could put SPY or QQQ in here and say when the spiders or the Qs hit a level, buy a put in Netflix. That's a little bit past the topic of this discussion. We're just going to stick with Netflix, but that lets you know, yes, it automatically populates with the underlying that you're trading, but you can make that any symbol that you wish. Okay, once that is determined, then we're going to move over to the method. I always just use the market price, because when you're talking about the stock of Netflix, you're going to have a decent bid-ask spread. If you see that up here in the top of this, I can see that we're about 10 cents, 5 cents wide on it. So I don't feel like coming in and splitting hairs over the bid ask in the stock is really that big of a deal. So I just use the market price. Then the trigger is the most important part. And I always read this back to myself to make sure that I'm executing it correctly. I feel like, is this all the stuff I learned in elementary? These are just those funny little symbols where it's showing you this means that the Netflix market price has to be greater than or equal to whatever threshold we determine. In this case, since we're trying to short strength, we want this price to be, above or at that 21 EMA. So we've got that set correctly, and now we just go back to the little threshold. This is where I'm telling you where, I write this down sometimes either on paper or in Notepad or whatever you've got, because if that Netflix screen isn't up, well then you still know the price that you were focused on. So let's take that 277.75. And then I always make a point to hit tab, because if you'll hit tab after that, it makes sure that the field is entered correctly and, it actually takes. Okay, once we've hit tab on this, now we're going to move up into this upper area. We want to be on the buy side, right, because we're buying the put option, so that'll be left as is. We're going to buy it as a limit order, and then this is where it gets interesting, because we don't know what that put option is going to be trading for when Netflix hits that price. If it hits it tomorrow, it's going to be trading for a very different price than if it hits it on Tuesday or Wednesday of next week. So what we want to do is change our limit linking and actually I got this a little bit backwards, but here what we're doing is once the condition is met, just switch it over to either the bid or the asks. Now remember, when this is rallying and we want to come in and buy the put option, if you buy it on the ask, you're going to be filled immediately. If you're going to try and buy it on the bid, that means that you're trying to buy the put option a little bit cheaper. I think in a situation like this, you do want to focus on the bid, because what we're assuming is that Netflix is rallying, and as it moves up, it may not pause directly at the 21. It may inch a little bit higher. So as you're working off this residual strength, try to buy it as cheap as you can. So that would imply coming in and buying the order on the bid. The two ways that I do this, and here again, I think it's worth talking about both sides. For a lot of people, I would just tell them to do the market price, and that's going to come in and split the difference between the bid and the ask. But if you get the degrees of aggression, where if you want to try to buy it a little bit better, then you try and buy it on the bid. If you want to make absolutely sure that you get filled, well, then you buy it on the asking price. So in this case, I'm just going to do the bid, and then the limit offset takes it one step further. So what it would do is say we're in this spot, Netflix has rallied, and the option is trading $18 by $19, and we're going to try and buy it on the bid. Well, then that means that order is going to be placed as a limit order to buy it at $18. If you want to do the limit price plus a dime, well, then you would change this to 10 cents. And do you see how you're not splitting the difference? You're not doing it at $18.50, but you're doing just a little bit more aggressive. Then, of course, if you wanted to be more conservative, you could do it to the negative degree. You would just subtract from this. And then that would say, all right, when that conditional price in the stock is hit, take the bid price and subtract 10 cents from it. That is trying to buy the option even cheaper as the stock remains strong. There again, most of the time I just keep it simple, and I'm either going to do the bid, the mark, or the ask price. It's just worth covering because that's another field there. So once all of this is configured, same thing where I'll hit tab to make sure that the field is accepted. Then you just have to decide if you want to do this as a day or a good till canceled order. 9 times out of 10, you're going to want to do this as a good till canceled, because you're not going to take all this time to set up this idea and then want to redo it tomorrow, right? This is generally based off of swing trading entries and exits, so you'll give them a few days to work, and that's why we set it as a good till canceled order. Okay, once we've got all of those fields submitted, take the time to read this back to yourself. Down here in the description, we want to submit the following order. We want to buy one of the Netflix December 285 puts when the ask is at or below the market bid of the security when the order is submitted. When the order is issued, its price is set to the market bid on the instrument at that moment. The order is valid until it is either filled or canceled. Now that may be kind of a mouthful, but I think the actual confirmation screen's a little bit easier to identify with, but that's all right. So we'll hit save, and then when you come in here and hit confirm and send, this is another spot where I'll just take a second and read all of this back to myself. So, and like I was telling you, this one to me makes a little bit more sense, but we're all very familiar with the order description. Anytime you send an order, you're going to have the description of it. What is unique about this one is the condition that comes in after. So we're buying the put option at the bid price with no adjustment. Remember, this is a limit order, so you could use this even in underlyings that have a wide bid ask on the options. You could still use it because it's not being thrown in at the market. It is a limit order. Then the next big part of this is that Netflix, the market price of the stock, has to be at or above 27.75. So that all looks good. That is confirmed where we want to be. I want to reiterate this just one last time, because if you get this backwards and you accidentally do it with the market price at or below 2775, well, of course, that condition is met right now. So you would be filled the moment you sent the order, and you just did all this work for nothing. So make sure you've got that part of the condition correct, and then we'll hit send. As long as you do not hear the order immediately fill, then you know that you're in good shape. And now what you can do, I didn't know about this in Thinkorswim until I had used it for a little while, but anytime you see this little arrow right here, you see that kind of tab that sticks up just a little bit? That is a spot where you can get to all of your working orders, and you'll find it all over the platform. I think it's in almost every tab. So just bring this up, change your orders to working only, and now we can see that order sitting there for Netflix. That order will also show you the conditional price that you are focused on, which side of the trade you're on, and then of course its weight condition. When and if this happens, and it depends on how much of a gap there is in between the two happening, but once the price of the underlying is hit, this will go to triggered, and the actual limit order will be working, provided it bids up, another 5-10 cents, the option will also fill. So kind of a lengthy description of this, but hopefully that gives you all of the ins and outs of how to buy an option, in this case buying a put option on a rally. You would just inverse it if you wanted to do the call side, buying it on a pullback, but we may look at some of that as well. I think this will conclude that tutorial.